Biden there maintaining his stance that the economy is headed toward a soft landing. It comes as the market gears up for the Federal Reserve's annual meeting at Jackson Hole next week, where Fed Chair Jerome Powell may hint at the central bank's plan for rate cuts. Joining me now for her take on what to expect from the Fed next week is Jeanna Smialek, Federal Reserve and economy reporter for the New York Times. Jeanna, really great to have you with us this evening. What does your reporting indicate Powell might want to message next week, 1 week from today? There's some of the Fed officials in the last few days after the CPI number have indicated a greater sensitivity to downside risk for the economy. Markets interpreting that as dovish. What's your take?
I think most economists at this stage are thinking that he's definitely going to hold that door open to a rate cut in September, just because the Fed is nervous about the job market. They're sort of finally making progress on inflation, so why not get going? I think the big question is whether he's going to keep that door open to a large rate cut. The question seems to be, is it going to be 25? Is it going to be 50? How big is this rate cut going to be? And I think that the answer is, Chair Powell is unlikely to give us a really clear indication, because he's speaking just before that all-important jobs report comes out on September 6th. So I think we've got a few days before a really important data release. He's probably not going to want to back them into too much of a corner in these remarks.
So you think that he still is going to want to preserve that kind of rhetorical flexibility that he habitually reaches for, even though we're at this point where so many of the preconditions the Fed has set out for when they might start to make policy less restrictive seemingly are in place?
I think what most of the economists I'm talking to are saying, and I think what we've kind of gotten a hint at from some of the Fed speakers we've been hearing this week, is that the question now is really over sort of the size of the rate cut and less about the timing. I think most people are really expecting them to move rates in September. I think it'd be a bit of a surprise if Chair Powell came out at his speech in Jackson Hole and tried to take that timing off the table. So I think most people are sort of expecting a rate cut in September, given what's been happening in the labor market. Inflation's coming down, unemployment's moving up. They're probably going to want to sort of react to that by moving rates. But I think the question is just, how big is that? How big is the move we get in September?
We will see the minutes from the Fed's last meeting, which is, a couple of weeks ago. And after that, Powell essentially said, look, we are not interested in seeing more weakening of the labor market at this point. It was one of the several times in recent months where he's indicated he doesn't necessarily think there's some scary trade-off between, getting inflation in line and what the economy has to do. Is that still where we are right now, or are they alarmed at the rise in unemployment?
Yeah, so I think this was the fastest a set of minutes has ever become dated in the history of my experience of Fed watching. So basically 24 hours after the Fed meeting, we had some weak jobless claims numbers, which have since reversed a bit. But within 48 hours, we had that rise in the unemployment rate. And so the Fed met on Wednesday. By Friday, it was clear that the job market was a little bit weaker than I think they had probably anticipated it would be. I don't think anybody was calling for the move up in unemployment that we saw. Now, that could, of course, reverse itself. But I think that assuming it stays steady, assuming that move up in the unemployment rate was real, these minutes are going to be a little bit dated because I think that the Fed officials at this meeting were anticipating that what they were looking at was a situation where unemployment was still pretty low and pretty stable, where inflation was coming down pretty steadily, where they were really achieving their inflation goals with a pretty strong labor market as a background setting. And I think that if that labor market situation is changing, that could potentially change their calculus a bit.
I keep going back to the press conference in early 2022 as they were just starting to tighten. And I guess maybe you were in the room giving questions to him about just exactly, maybe there was a way to look at the inflation numbers and say that it wasn't so terrible, or maybe they would come down quickly. And Powell said, look, this is not a time for a particularly nuanced view of inflation. It's too high. We have to chase it. We have to get there. I just wonder if there are some folks within the Fed who are now saying it's not time for a very nuanced view of unemployment. It's going up. Maybe the Somme rule is close to being triggered. Let's not sort of rely on the idea that it's just labor supply increasing that's causing that.
Yeah, I think nuance is back in style over at the Fed. They're really looking at everything with a little bit of nuance at the moment, actually, and I think that includes the job market. I think you will definitely hear people say things that sound like, when the job market gets soft, it tends to get soft quickly. Austin Goolsbee has been out making comments sort of along those lines, but even those people tend to take a relatively nuanced view of how you're thinking about this particular moment. Just because I think so much in the July jobs numbers looked a little bit weird. We had a lot of people on temporary layoff. That doesn't happen all that often, and it made the report look a little bit noisy. And we had a hurricane come through. And so I think there are a lot of people who are saying you don't want to just jump to conclusions. You don't want to scream that we're in a recession at a time when, Walmart earnings look strong, GDP looks strong, consumer spending looks strong, and this is the only thing that really looks weak. And it might be a one-off, and it might reverse. And so I think they're going to take a very nuanced reading, which I think is why, coming back to Jackson Hole, Jay Powell's probably going to want to keep his options open for the moment.